NIO holders, listen closely because this is the definitive moment we have been waiting for. The geopolitical tides are not just shifting, they are turning massively in our favor following President Trump's confirmation of an excellent call with President Xi on February 4th. The sheer scale and magnitude of this diplomatic breakthrough cannot be overstated. We are seeing China commit to massive purchases of American energy and soybeans, a strategic move that signals the trade war ice is finally melting. This development effectively removes the single biggest risk premium that has artificially suppressed NIO stock for years. This geopolitical thaw comes at the absolutely perfect time, landing right on the heels of Canada agreeing to lower tariffs on Chinese EVs. Combine this macro-level tailwind with NIO smashing operational records, delivering 27,182 vehicles in January alone, and you see a stunning 96% year-over-year growth trajectory that proves the demand is not just real, it is accelerating. With the political headwinds fading, the market focus can finally shift to where it belongs. NIO's aggressive expansion with the new Firefly and Onvo sub-brands that are set to capture global mass markets. While the headline question of NIO entering the USA remains speculative, the extremely good relationship Trump highlighted suggests we are entering a 3-year golden era of stability. In this environment, Chinese assets can finally fly. If the US follows Canada's lead even slightly, we are looking at a blue sky breakout scenario that could send this stock parabolic. The heavy geopolitical anchor is being lifted and the ship is ready to speed. Simultaneously, the competitive landscape has shifted dramatically. Tesla has officially stepped away from the flagship luxury segment by discontinuing the Model S and Model X, a move that effectively hands the keys to the premium kingdom over to NIO. This strategic withdrawal creates an immediate, massive vacuum for high net worth buyers who are not just looking for transportation, but for a tech-forward status symbol. NIO is uniquely positioned to capture this displaced demand with its ET7 and ES8 models, which now serve as the direct spiritual successors to Tesla's legacy flagships. While Tesla pivots its narrative entirely toward utilitarian autonomy, robotaxis, and mass-market volume, NIO is doubling down on a human-centric luxury lifestyle. This is defined by concierge services, advanced smart cabins, and an exclusive user ecosystem that appeals to the very demographic Tesla is abandoning. The competitive edge is further sharpened by NIO's battery swap infrastructure, which now stands alone as the superior solution for long-range anxiety in the absence of the Model S long-range. In the critical Chinese market, which remains the global epicenter for luxury EV growth, this shift reinforces NIO's dominance in mindshare. It allows them to consolidate the premium tier, while competitors like Lucid or legacy German brands fight for scraps. Ultimately, by vacating the halo car space, Tesla has inadvertently crowned NIO as the new standard bearer for electric luxury. The market is realizing that while Tesla chases robots, NIO is winning the drivers. We are currently standing on the precipice of a monumental achievement in the electric vehicle world, as NIO power charges full speed ahead toward the historic 100 million cumulative battery swap milestone. Looking at the live data from the morning of February 5th, the counter sits at an incredible 99,867,924 swaps. This leaves a gap of roughly 132,000 to bridge before the confetti falls. With a robust network of 3,728 swap stations now online, including 52 new locations added just this year, the infrastructure is humming with activity, delivering an average of nearly 20 swaps per station daily. While the all-time daily record of over 145,000 swaps set back in September 2025 shows us what is theoretically possible, hitting the target today would require a truly Herculean effort. However, the data trends are undeniable. The network is consistently clearing 80,000 to 100,000 swaps a day, making it a mathematical certainty that we will cross the finish line within the next 24 hours. This isn't just a number. It represents 8 days and 14 hours of relentless pace since the last million, proving that battery as a service is not just the future, but the dominant reality of today. So keep your eyes glued to the ticker, because whether it happens late tonight or with the morning rush, Friday, February 6th, is destined to be the day we officially enter the 9-figure era of energy replenishment. Let's talk about NIO's aggressive expansion with their Gen 5 battery swap stations, because this is where the rubber meets the road for their long-term viability. We are witnessing a massive leap in technology with these new fully automated units capable of swapping a battery in a blistering 72 seconds. However, innovation of this caliber carries a heavy price tag. The gross cost for a single Gen 5 station is estimated conservatively at $650,000, a figure that would normally terrify investors worried about cash burn. However, NIO has executed a masterstroke by forming the Battery Swap Alliance. This isn't just about sharing technology, it is about sharing the bill. By getting partners to cover roughly 40% of the capital expenditure, or about $260,000 per station, NIO effectively drives their net cost down to a manageable $390,000. When you multiply that savings across a rollout of 1,000 new stations, the difference is staggering. NIO is funding a $650 million network for a net investment of roughly $400 million. But the story gets even better when you look at the recurring revenue. Through their battery-as-a-service subscription model, each station is projected to generate up to $200,000 annually. Do the math, and you are looking at a break-even point in just 2 to 3 years per station. This turns what looks like a heavy expense into a high-yield asset class that secures NIO's dominance while their competitors are still figuring out how to plug in. Finally, let's look at the technical breakdown for NIO Incorporated following a volatile session where the stock closed down roughly 2.5% at $4.44. The price action today tells a story of early weakness followed by intraday stabilization. The stock opened at $4.54, which immediately marked the high of the day, before drifting down to find a critical floor at $4.38. Despite the bearish pressure, the bulls managed to defend the lows, pushing the price back up to close exactly at the volume-weighted average price, or VWAP, of $4.44. This specific closing price is crucial because it acts as the equilibrium point, meaning the market is currently undecided. From a technical perspective, NIO remains in a broader downtrend, trading significantly below its daily 50 and 200 simple moving averages, but the intraday indicators are hinting at a potential relief bounce. The Relative Strength Index, RSI, is hovering around 57, suggesting recovering momentum, while the MACD histogram shows bearish pressure is fading. For the next session, we are looking at two distinct strategies based on how price reacts to the $4.50 resistance level. For a green day scenario, we need to see a high volume breakout above the intraday 200 moving average at $4.50. If the price can hold above the VWAP in the opening 15 minutes and clear that $4.50 hurdle, we are targeting a gap fill at $4.55 with a secondary extension toward $4.65. On the flip side, for a red day strategy, watch for a rejection at the current level. If the stock fails to reclaim $4.50 and breaks below the chandelier support zone at $4.41, the bears will likely drive the price back down to retest the low of $4.38, with a potential flush down to $4.30. Ultimately, the stock is compressed between support and resistance with steady volume of 38 million shares. Traders should wait for a confirmed break of the $4.50 level or a failure at $4.40 before committing to a direction. But make no mistake, with the geopolitical winds at our back and the fundamentals stronger than ever, the setup for a massive reversal is here.